This is a coal company. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So we go here to economic signals, and here is coal, and here are a bunch of coal mining stocks, and we will look at natural resource partners. 115% here from the low, and we are pretty close here to the 52-week highs. So here is the company's website. NRP, very obviously an American company. So it's a diversified natural resource company that owns interests in coal, aggregates, and industrial minerals across the United States. Okay, so let's first here look at the charts, weekly data points, big picture. So yeah, we see that we are still drastically away here from the highs. So if we were to measure from this high to this low, that is minus 99 almost percent away, and we are still 94% away from those highs. If we were to goof around with some percentages and measure all the way up there, that would be 1,541% rally. But things have changed for the coal industry. What is interesting is that we have recently seen a bit of a rally. So this has to do with the energy crisis that there's been a lot of talk about. So yeah, that has been temporarily bullish for this stock. When we go here to the daily data points, then you can see that the rally was very strong. It came here from the blue 100-day moving average, which has been a good risk-reward opportunity. But there has been a rally at this point. Now, when we look here at the weekly data points, and when you look here at the RSI, the current level is high risk for the bulls. When we look at the distance between the price and the purple 20-week moving average, green 50-week, and blue 100-week moving average, then you see that previous times where we were this far away, it usually formed a major high. Like if you see here, it formed this high, and during this distance here it formed this high. So this current reading is very high. The time where we have been higher, that was back here during this rally in 2016. Then we went even further away from the 20-week and especially the 50-week moving averages. When we go to the daily data points, looking here at the daily RSI, the current reading, as you can see, it's very high. You have to go back here to November of 2020 to find the higher reading, and that was during this spike, which resulted in a very substantial correction. And when we go further back here to the last time we had a very high reading, that was this huge move, major rally, and then we reached an RSI level that is extremely similar to what we have now, and then we did see a major pullback. And the distance here from the 20, 50, 100, and the 200-day moving average is very high. It is at a place which historically has a tendency to create pullbacks. And when you look here at the price action of this stock, pullbacks are very frequent. Sharp rallies, sharp pullback. So just measuring this was minus 11%. So yeah, given that it's currently at an elevated level, this is risky situation for the bulls, but potentially quite interesting for the bears. Here is weekly data points, minus 45-ish% here with the S&P 500, but 88% positive here with the oil and gas XOP ETF. Looking at the daily data points, 76% positive with the S&P, and 42% positive here with the oil and gas ETF. When we look here at the seasonality, over the last 5 years, October has been pretty strong, November has been weaker, then December is strong. The last 10 years, then you see that very clear seasonality of October usually tends to close higher, but then November and December are weak. And when we look at the last 20 years, then you do see that, yes, October has a tendency to be strong, but on average, it's only a 1.4% gain. And September is usually pretty flat. And if we actually do measure, the move we got here in September. So in the month of September, we got a 19% rally here in natural resource partners. And when we look here at, the seasonality, that is way, that is, yeah, that's way above what we tend to see. So we have seen strength already. Which begs the question, how much is left for October? And is there a risk that the strength that we usually see in October now came in September? We have broken out above the trend, the channel, we have a bit of a channel here. So this floor has been a good risk-reward buying opportunity, but these, spikes above, resistance, that's very late, that's, when, that's more of an amateur's place to buy. When it comes to analyst price targets, the most recent one is from 2020, March, $18 price target, and that is minus 27% below the current price. Sachs does not have any rating in particular. They do have an industry category, coal, and that is in the top 37%. There is a pretty healthy 7% yield though for natural resource partners. So the yield is definitively something that any bear should take into account when it comes to short selling. The good thing about the dividend yield is that it is paid out at pretty well-defined intervals. So it's something that can be avoided. Okay, and also when we go here, there is an option market. Yeah, so to sum up my take, I think that we could make a pretty strong case that technically speaking, looking at the seasonality, also the fundamentals, the current move we had is a very mature bull move. Could it go higher? Yes, it's possible, but the big picture trend for this stock is that the current readings are high risk for the bulls and has a tendency to be good for the bears. And the energy market is it's one of the most studied markets out there, probably the most studied markets. So it is not the case that the things that have happened, the energy crisis came completely as a surprise. It's been known by the professionals. It's more that, the latecomers have now bought it, but maybe the least sophisticated buyers have jumped in.